analyst here at Trade Captain and amanacapital.com. I'm going to provide you guys with a quick update on the markets. That's what you should do at this time of the day here in the live trading room. I'll do this Monday to Friday, so if you're watching this on YouTube or Periscope or anywhere else, then don't forget to swing by the website for more analysis. And as well, here on the technical analysis, we have, of course, a bunch of short-term technical analysis reports in the videos and so on the homepage as well, and all the other sections as well. We have more news as well for anybody that is interested to know more about the markets. Okay, let's get going. But before we start, as always, let's ensure that everyone fully understands that trading financial markets is unfortunately risky, and that there's a genuine risk that we'll lose all of our invested money. So please bear that in mind if you're new to trading, and don't forget to check out the risk disclosure statement down here. And that's it. Let's get going. So this is the euro versus the USD, and the market is bullish and looks to potentially bottom out. I hope it's going to bottom out here between 129.94. It does make sense that it will try to bottom out here just because we are working with a bullish trend. The market bottomed out here on November 6th at 115, and we almost moved up all the way up to 126. And the way that works with these trends is that I guess everybody knows that this is maybe a little bit overbought, and one point needs to correct to the downside. But it's impossible to know exactly when that's going to happen. And sometimes what happens is that the trends just continue and they go on and go on and go on, and then you think it's going to bottom out or peak, whatever the trend is, and then it just continues, and then maybe 1 year later or maybe 2 years later it reverses. So the idea here is just to stick with this trend until proven otherwise. And for now, we're all good. We corrected 50%, which is a little bit more than I thought it would correct. But as long as you trade above 122.11, this overall trend is going to be bullish. And yes, it can go down a little bit more, but I think eventually it's going to try to test 125.50. And then, of course, if we take out this low, then that could potentially be the beginning of that reversal that people have been waiting on to sell. But we'll deal with that when and if that happens. Here's the price of Bitcoin. There's not much happening here. The market is oscillating around the midpoint here, which is $11,138 per coin. And it's people, I mean, if you look back over the last few years, it tends to be sort of a bearish kind of price action in Bitcoin around this time of the year. And this has to do, I don't know if it has to do with it, but some people say it's because of the Chinese New Year, and people withdraw money to spend on gifts and things like that. So maybe that's the reason. I'm not 100% sure. I know technically that we are in a downtrend as long as you're creating these lower and lower highs, and it's also very straightforward looking at this market that people are not really that motivated to get involved right now. What is interesting though is that the more and longer we spend trading sideways, then eventually when we move to the upside, it will hopefully be more explosive. It tends to be like that when something is trading sideways, and then when volatility kicks in, because everybody wants to get involved, we tend to see higher volatility. So what I'm looking at is that potentially lowering the trend defining level to this level. So we want to keep an eye on 1,200. And obviously if we take this out, we're probably going to target 13,000, and then probably down again, and then probably up. So keep an eye on this. I'm not going to use it as a trigger for a long position, but I'm keeping an eye on it, and I would really want to see what happens when we start to trade to the upside. So it's consolidating. It's in downtrend. It could target these levels, but my preference is bullish positions in line with the big picture. Why? Because the big picture is bullish, right? So the big picture is bullish, whereas the short term for now is, sorry about that, the short term right now is bearish, right? So as soon as this pushes to the upside, we could have potentially resume that uptrend, and that is really the best time to trade if you're following. I mean, that's what makes the most sense, because at that point you align the short-term trend, so you get an entry based on the short-term setup, but your target would be dependent on the big picture, which again, maybe will rally all the way up to $20,000 again. and that's it. So we just need to be patient. It might take longer time, and I think it's fine anyway. What tends to happen is that people forget about the markets, and then it kicks in again, and then the next time you see it on TV, it's probably going to be much higher. Here's crude oil, and the correlation between anything related to the dollar is extremely high. So a few days ago we said break to the upside takes you up, and then we said if it goes down, probably trade is going to go long again. And then now on the third time, we don't appear to be that lucky, but we're not stopped out yet. So I'm going to maintain my bullish bias and remain bullish above 64.31. You can't necessarily see it on the 4-hour why I picked that level, but on the 1-hour you can see so. So I know that this is a buy zone, and I know people have been buying here. They bought here and here, and hopefully they're going to buy here as well. And what I'm looking at here is that as long as you trade above this section here, I'm going to be bullish. And in fact, it is this buy zone I'm actually focusing on. However, I don't want to put my key level just at that level. So that's why I'm placing it here. And what is interesting as well is that if you're going to follow the markets really strictly, then you should actually put your stop loss at 62.80 because that's the large trend defining low. But because this is a market that has been gaining the way it has, then as the trend is starting to get a little bit too long in the tooth, when it's rallied a little bit too much, you know, here in the case it's up with 19%, then I think it makes sense to bring the stops closer and closer and closer to the actual price action. And I know eventually we will be stopped out, but the idea here would be, you know, all right, we lose out 1.73%, but we've been bullish from these levels down here, so we'll keep 8.86% return, and we get back a little bit at the end. So that's why I'm actually pushing the stop loss higher and higher. Eventually, of course, well, what could happen, of course, is that we just spike lower and then the market just resumes the uptrend anyway. And if that is the case, then it's usually good, you know, give it a day or two for the market to relax, and then when that's done, we look to actually get involved at a later stage. Now here's gold. It's pretty much like you know, the euro, the pound, crude. So we had a nice correction down here, market bounced and then moved back down to the buy zone, but people do not really want to buy here right now, and we're having a substantially stronger correction than I would have liked. And again, maybe an indication that this strong trend we've been working with, or I didn't turn bullish gold, but this bullish trend has been in gold since December 12th, that might come to an end. I started to become bullish up here. Now here, if we trade below 1,328, then that's it. I think probably go down a little bit and then probably up, and then we'll see if we're gonna sell in the decline, or if it makes sense just to you know, lay low and then wait for some sort of a better clear setup. It's the DAX under a lot of pressure. The DAX is bullish above 13,134, and I suspected the market was going to try to bottom out, but up here, not down here, but at least it's trying to bottom out. Hopefully it'll do that, move back up to the entry, and hopefully eventually, you know, create a higher high. So no real change to the outlook here for this market either. Okay guys, that is the main presentation of today's update here on tradecaptain.com, and we have used our 600 seconds more or less. Just gonna see if there's any quick questions, and there's no quick questions. That's fine. Okay guys, I want to thank you so much for joining me, and I'll see you guys tomorrow at the same time here at tradecaptain.com. Don't forget to like the video, and as well, if you click here on the actual title, you will go to YouTube, and on YouTube you can subscribe to our videos. The good thing with that is that when we upload videos, you'll get notification of that, and you can obviously choose if you want to have email or a pop-up and things like that. And that also allows you to interact with me here in the live chat. As well, if you do decide to upgrade or become a member in the premium section and a client of Amana Capital, then the live chat is the same. So you need a YouTube account anyway to actually be able to interact. And with that, guys, we conclude today's market update. Don't forget to share. Don't forget to like. The more people like it, the more time we want to spend on this. So please help us out and let us build some strong momentum. Have a good day and happy trading. Thank you.